Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the day's trade. Well, if you look at the markets right now, of course, we've had a tepid, lackluster kind of a day with more choppiness continuing on day one of the June FNO expiry session. We've now given up 24,850 points lower in trade is what we are at. Although PSU banks are bucking the trend at this point in time with very strong gains, 3% and above kind of moves that are coming in. The Nifty bank also because of that is now slightly higher, about half odd percent or so. Mid and small caps are also inched up a tad bit in trade, but the rest of the spaces still look weak at this point. When we look at the metal space, that's the one that is the weakest link, 1.4% lower. IT has dragged by nearly a percent as well. Autos, FMCG, consumer durables, all of these pockets are also reeling under some pressure. There are a handful of gains as far as the Nifty stocks are concerned today, about 8-9 stocks or so. Eternal is the top mover. State Bank of India from the PSU banks is definitely doing well. HDFC Bank, L&T, Bajaj Finserv, Dr. Reddy's, various sectors and no clear trend from the first 4 or 5 stocks that you can really spot. Now, when we look at the downtrend, you're looking at Bajaj Auto after earnings that's now nearly 3% lower. Hindalco, Shriram Finance, Nestle, HCL Tech, those are the pockets that are dragging in trade. FNO, you have BSE as the top mover, 8% higher. Muthoot Finance, NBCC, these are some of the stocks that are actually up and about in trade. Let's welcome our guest on board to understand more about markets. Mr. Abhishek Basu Malik, co-founder and fund manager at Sri Rama Managers PMS is now joining in. Warm welcome, Mr. Basu Malik. Good to have you with us. Let's start off with, as always, the global outlook and then we'll come to the domestic cues. Now again, over the last couple of sessions, it was earlier just limited to what Donald Trump is saying. Every day he will make some varied statements that will cause some stir. But now even the courts over there, those are sending some confusing signals back home in India. One day it's a ban on tariffs, they call it illegal. The next day there is some relief from the other court that's happening. So again, there is a tariff confusion that continues. How should retail investors be really looking at this, or should one absolutely shut that till the time there is some clarity?
So, like we discussed last week, right? So this is going to continue. My expectation is by the end of June, probably all of this is going to be behind us. Either we have a tariff agreement in trade agreement in place between India and US, or at least the contours out there in public, or or at least a lot of these court challenges. I mean, the challenge in court in the US was inevitable, right? This was supposed to this would have happened anyway, and my expectation is that this is going to go up to the Supreme Court also, because both the sides will continue taking the legal route, and that's par for the course. I think this entire noise, etc., is going to die down over the next month, hopefully. And once that dies down, the more important factors of business, of economics, of geopolitics, that is going to come back to the forefront. And even then, I think we are living in an uncertain world, right? So there will continue to be some factor or the other which are going to keep the news media busy.
Absolutely. Now, Abhishek ji, do help us understand when it comes to, the kind of scenario macroeconomy wise that we are looking at the current realm. How are you looking at the things? Now, in the US, remember a few months ago, there was this entire fear about recession. Where do things stand at this point in time with the latest figures of GDP coming in? We are awaiting our own GDP data for today as well. On a macroeconomic front, what are the key cues that we are waiting for, sir?
See, one thing which looks more likely is that US is going to have a contraction. Whether it becomes a recession, whether it continues for a long time, that only time will say. But definitely tariffs on and off, policy changes, etc., is never good for business, right? Because even if you are an American business, right, if you have to sort of put up capex, or if you have to do something, you cannot do so in an environment where the policy keeps changing from day one to the next day. So, you will obviously then wait for things to settle down and then take business decisions. So that is one part. Coming to India, I think again, India will continue to grow 6.5 to 7% for at least the next, I don't know, maybe 3 to 5 years. We've had a policy. I mean, we'd have statements from the finance ministry and from the chief economic advisor's office saying that we can continue this growth for many years. I don't know about many years, but definitely in the near future, it's not uh, unlikely that we will go. We will grow at between 6 to 7%. The challenge is going to, be to beat that 7% mark upwards. So in a nutshell, India is going to keep growing. We've been one of the best performing economies in the world. I think we will continue to do so.
Okay. When it comes to then a reflection on the stock market, sir, how do you see things panning out since we are betting big on the India growth story that continues to grow stronger? What are the triggers that the Indian stock markets will be looking out for, sir, once the uncertainty is out?
See, I think we have already started seeing reasonably good FII inflows for the last
Yes,
couple of months.
true.
My guess is that is going to increase once you have markets settling down and starting to perform a little bit. You will also see more retail participation through mutual funds, through direct investments. People who were like a little bit scared and out of the market for the last few months, large part of them will come back. You will see increases in SIPs, etc., etc. So liquidity inflow into the Indian markets could uh, be very, very, happily scary. I don't know if that's the term, but we could be uh, very, uh, how would I put it? We could be very surprised by the amount of liquidity that flows into the Indian markets, especially from across the globe.
Yeah.
And if that
Let's,
happens,
yeah.
obviously, you will see lot more of IPOs. You will see a lot of these broad-based rallies happening. And I don't expect valuations to sort of come down a lot in this. In fact, some stocks or some performing sectors can actually go from uh, richly valued to very, very expensive.
Now, Mr. Basu Malik, since we're talking about the domestic triggers, just in a week or so, we'll get the RBI policy also out. There is again a lot of expectation that this time around, the third consecutive time, we could be seeing some support extended from the RBI when it comes to the slowing economy. A 25 basis points cut is what general expectation is this time. What's your own suggestion as far as the RBI policy is concerned? Many also hope that there could be two more policy cuts as well. Are these triggers that are already penciled in, or do you think in the markets they will be able to probably cheer more once the cuts finally happen?
Very difficult to figure out whether what is actually priced in, but my expectation is that this year we can see at least two rate cuts by the next 1 year from now. We can actually see maybe 3 or 4 rate cuts, right?
Okay.
So we are now in a reducing or a declining interest rate regime for sure. And not only are we going to see reduced inflation. I think we've already started seeing that. We've had an early onset of monsoons, which is good for the rural economy, which is probably good for food inflation coming down. So overall, I think in India, primarily, you see inflation comes from two places. At least the worst kind of inflation. One is food, the other is fuel, right? And if food inflation goes down, fuel, uh, it's been in a range for a while, and I don't see that sort of going up a lot because again, global policy of pumping more oil sort of puts a lid on the prices. So overall, I think inflation, etc., will be reasonably contained. So that gives a lot of room for the RBI to actually do these rate cuts. And if those rate cuts come through, then obviously it's good for the markets.
Let's come to sectors and stock specific coverage then, sir. First up today, it's PSU banks that are rallying. I think this is something that we touched upon even last week. Just wanted to get a sense on PSU banks particularly. Are there any top favorites? Where do you see recovery to extend from where they are currently after the long haul consolidation?
See, I am personally, first of all, any stocks that we discuss, take it with a pinch of salt. Assume that I or my firm has an interest, or our clients have an interest. Having said that, I think PSU banks or even private banks, large NBFCs, the entire pack is likely to benefit because of the decline in interest rates going forward. So once that happens, you will see that especially some of these, let's say, I'm very positive on the housing finance companies, uh, the large and the mid-tier banks, right? Especially ones that are well managed, they actually will have a tailwind. Within public sector banks, I prefer the likes of Indian Bank, you know, Union Bank, SBI, Bank of Baroda. So uh, pretty much across the board, I think all these will do well.
Okay, so that's as far as PSU banks are concerned. Let's come to some other spaces as well. We are seeing renewable energy in focus yet again. Suzlon, for instance, after the earnings, it's shot up about 13 odd percent. How have you been tracking this space very closely? What is it that it presents as an opportunity to retail investors right now, sir?
Overall, I think renewables, there is it's a decadal theme, right? We are moving away from fossil fuel based power to renewables, and that is
Correct.
the mandate globally. That is the mandate from the government of India. So structurally, uh, companies which are in that value chain, whether they are wind power, solar power, uh, hydel power, whatever. I mean, all of these, whether they're renewable, non-renewable, the entire space looks interesting. You have to look at the valuations. You have to look at the company's pedigree, and you have to look at what kind of growth that is possible, and then look at them. I personally don't track Suzlon all that closely, but I'm more positive on the solar powered or the battery manufacturers, because that's where I think a large part of the value capture is going to be.
Okay. Let's also focus on the capital markets related story, sir. That's been growing up again as a theme. BSE has been again inching at fresh highs right after the bonus split has taken place today. Also, there's a substantial 8-9% kind of a move today, 2678 as the current levels. What looks good to you within this space? And do you still think there is a lot of headroom for investors to even jump in at the current stage within this space?
So one, obviously, I think we discussed this also last time. I think again, wealth management in India is at a pretty nascent stage. In the next 10 years or so, it's going to sort of really, really grow. We see a lot of young investors or young folks who are getting into industry, getting their first jobs. Very few are actually going the traditional route that people like me, when we started our careers, we put our money in PPF and LIC and things like that.
Correct.
Nowadays probably nobody is doing that. More people are getting into mutual fund SIPs, and that is the way forward. And if I look at and try to correlate, 1980s, US started their 401k plan. People got an opportunity to participate in the equity rally, and that sort of the retail participation created a 20-year bull run, right? And my sense is that we are part in the beginning stages of this phase in India. We've already seen, say, post COVID, I think a lot more of participation from retail. I think more and more that trend to continue, and we may be like 3-4 years into this. The last 6 months were probably was a correction in the overall bull phase, and then the trend continues. We sort of are in a multi-decade trend. where financialization of savings happen, of more and more participants in the equity markets happen. So this is a great space to be in. I mean, the entire wealth management, broking. The only thing that you have to sort of look at is the competitive intensity, uh, how the pricing, etc., factors play in. Because if you look at the pure play brokers, right, the challenge comes from how do they monetize, because a large part of the broking income is from from trading future and options, and if the volumes change there, or if there's any policy changes, etc., then what happens? So I think we're better off looking at players who have multiple revenue streams. So people who are into wealth management, into broking, into distribution, a lot of it together. But in its totality, I think this space is something that is very, very interesting.
Within the NBFC space, I also wanted to focus on the gold financing, Muthoot Finance and Manappuram Finance. Yet again, there's a sudden spurt again on those. Suggestions from Finance Ministry going to RBI to look at some kind of tax relief for those taking loans up to 2 lakh rupees is what we are given to understand. How would you really look at, because so far these kind of stocks were under pressure because of so many strict norms that the RBI had been continuously talking about within gold loans. Are things going to turn any favorable for these companies?
Again, these are minor, flip-flops from, from a policy perspective. Overall, the trend, let's look at the overall picture. India, especially the people who are customers of these gold financing companies, are overwhelmingly people who do not get traditional loans from banks and NBFCs, right? Otherwise, why would they go and sort of take loans from a gold loan company? So, I mean, at least a large bulk of them are from a that segment. So, if you put in a lot of conditions and a lot of policy challenges, I mean, in terms of you cannot lend to these people, you have to get this paperwork done, then it becomes very challenging, and it's ultimately a problem for creating liquidity at the level or at the segment where it needs liquidity, right? So I think this kind of a move of having some benefits to uh, folks who are taking loans below a certain limit is actually a good move in terms of creating that cash liquidity from a asset which actually doesn't produce anything.
Absolutely. Let's focus on some other aspects as well. I also wanted to bring up for you, sir, especially when we talk about the spaces that we are likely to see some more pain to continue, either because of valuations or because of lack of triggers, headwinds persisting. Where would you put, which are the sectors that you would put in this category, sir?
IT, I think headwinds continue. At least mid to long term headwinds continue. Short term, there may be a bounce. I think defense, we need to be a little bit cautious because there's too many stories, too many projections to the moon happening. And also, you have to remember that defense is a very, very cyclical kind of a business. Defense procurement is very, very patchy. It happens very infrequently, and you don't get a standardized revenue stream. So you should not project very recent earnings for the near future. So I think defense, one needs to be cautious. Medium to long term defense remains a great play. But short term, because of the fact that it has run up a lot, the sentiment is high. Uh, I think we need to be slightly more cautious on defense.
Is profit booking or partial profit booking the right way to go about it? Every time the cyclical action comes in, you could probably start looking at some profit booking as well. Is that the right way to go?
It depends on your time horizon. If you are investing for the next 10 years, you're fine. If you have a 6 month kind of horizon or a 1 year kind of horizon, you might want to take some
Correct.
chips off the table and then continue with the rest.
Fair point. I also wanted to get a sense on the primary action, something that you mentioned, the IPO space that is likely to buzz even more going forward from here. But even this week as well, we had about 5, 6 IPOs, some listings also take place as well. Just wanted to get a sense of, have you tracked any for your clients? Have you advised any buy anywhere, Borana, Bellrise that listed, or maybe a Schloss Bangalore, that's Leela Hotels, Aegis, Wopac. There are so many of them, ProStarm, so many of them open, Skoda Tubes. Anything that catches your attention in terms of names?
Not at all. I have a very simple policy of looking at companies with at least 2 quarters of public track record. So let the froth of the IPO wear off, and then we'll take a look. If the business is great, I don't mind buying 2 quarters later.
Don't mind buying 2 quarters later, but at least there should be some sense in the fundamentals and the proving as far as the bottom line is concerned. But what about Ola Electric then, sir, which is again seen, its bottom line erode further, loss widening this time around as well. It was
Why,
again.
why would any, I mean, I don't know. I'm not a venture capitalist. Why would I want to buy into a company which makes more and more losses? It sort of beats me.
Okay. Anything from the new age tech space that gives you the confidence that now they are in a better footing at this point in time, rather from the last 1, 2 years when they got listed? Where do you find confidence that yes, things are on a project, further on a progressive path, and they could actually continue to perform?
See, I mean, companies like Zomato, Eternal, right? They've created a niche for themselves. They've created a need within their consumer base of whether it is food delivery, whether it is quick commerce, and these are here to stay, right? I mean, it's not going to go away. Uh, there are not too many players, so that's a pretty decent business in my opinion. How they are able to navigate the short term, ability to for them to grow and become profitable. That is the challenge. But overall, as a business, I think it's a much it's a good business. It's a business where there is demand from their customers. That's the first thing that I look for, in a business. That are people willing to pay to buy your product or service, and what is the kind of competition looking like? So for Zomato, the competition also is very small. You have only 2, 3 players in the space that they're operating in, and it's very difficult for somebody to actually get into that space and create the kind of scale and the kind of efficiency that they have done. Yeah, I mean, we've looked at, say, for example, DMart trying to get into quick commerce, but they've not been very successful at it from whatever I've read. Same for Reliance Retail. They've not been as successful as Zomato or a Swiggy. So, obviously Zomato has been doing something right. So that's a very interesting business. Whether you want to pay the kind of valuations that it quotes at today, that's a different discussion. That's a different decision point.
Okay. So that's as far as the new age tech space is concerned. Let's talk about a little bit on the commodities side as well. Again, when we talk about metal space particularly, which is largely dependent on the global supply demand situation, especially in China. How are you looking at the metal story as of now?
See, metals very difficult to sort of figure out what is happening. Too many moving parts for to actually have a medium to long term view. But other than metals, I think if I look at the mining space, I think that looks more interesting because that's a more sort of India centric story. You need to
Okay.
continue to do mining, get the metals or whatever out of the ground and into productive capacity. So that I think, and we've had some sort of a lull over the last few years. So I think that's picking up. So I would say mining sector is slightly better, in terms of a medium to longer term perspective than metals. And honestly, I don't have a view on metals, to be fair.
Okay. Let's also talk about the oil and gas scenario, sir. Crude oil prices again hovering around 60, 64 or dollars a barrel at this point in time. We are given to understand the OPEC production announcement will be coming in again. How is the oil and gas scenario going to be really looking at this point? And are you confident of any segment within this upstream, downstream, or the city gas distributors at this point?
Completely not confident about anything in this space because tomorrow morning OPEC says something, the entire scenario changes. Very difficult, to actually predict the price part of the oil and gas story. We all know that the demand will keep rising. The challenge on the other side globally, I mean, if I look at the slightly longer term, is there is going to be pressure on fossil fuels because of the thrust towards renewables, towards nuclear. So, last week I think Donald Trump, talked about again restarting the nuclear program for power in the US. I think also that's going to happen over most of the larger countries across the world. I mean, India would do it. I'm sure other countries, other larger, countries would do it because uh, you know, nuclear is one of the cleanest fuels. The technology has improved a lot over the last 15, 20 years, reducing the risk of leaks, etc. So, uh, nuclear is another very interesting space. So, very difficult to figure out what is going to be the short-term, pricing in terms of oil and gas, what is going to be the long-term pricing as well.
Yeah, absolutely. Towards the end, Abhishek, sir, if you could help us understand, by the end of Q4 earnings season, have you probably chosen any stocks for your client's portfolio? Have you selected any stocks where the growth story looks even stronger, where alpha could be generated despite the kind of volatility and uncertainty that the markets are faced with? Could you name a few stocks?
We are in the process of reviewing the entire result season. We keep churning or we keep rotating stocks in the portfolios that we have. I would not like to name any specific companies right now, but we are definitely in the process of, looking at the results, looking at the outlook for the next 1 year, 1 to 2 years for our long-term funds, and we'll keep making updates and changes as and when required.
Okay, fair point. Well, Abhishek, sir, thank you so much for being with us on the show, helping us with all your insights. Always a pleasure
Thank you.
to host you.
Thank
All right, 2 minutes to go before the market shut shop. Let's start winding up the trade right now. 87 to 90 points lower in trades. 24,747 is what the Nifty is hovering at the current levels. Almost 90 points now lower in trade. Of course, it's the metals pack, IT pack that's lower in trade. Autos continue to reel under pressure. Consumer durables, realty, pharma also under pressure at this point. Even the broader markets, the mid and the small caps, and slightly lower in trade. Nifty Bank higher, financial services up, and the PSU banks also up and about in trade. Eternal now 5% higher at 240. It's the top moving stock on the Nifty right now. That's Zomato, zooming past 5% higher. 240, 241 can actually be seen on Zomato right now. State Bank of India 2% higher among the top movers. HDFC Bank also leading to at 1941 odd levels, 0.7% higher. L&T, Bajaj Finserv, and even Reliance Industries flat with a positive bias, not too much of gains. On the PSU front, the index is down by over 1%, so cuts over there sharpened towards the end of the session, but NHPC flat with a positive bias. BSE continued to be the stock of the day in the F&O space, 8 to 9% higher in trade. Muthoot Finance, NBCC also pulled up. On the lower end, SJVN 8% lower, Mazagon Dock 8% lower, Alchem Laboratories almost 7.5% cut, Irida also down in trade. So those are the pockets that have actually not done too much in trade today. In the broadest index, Venus Remedies is up 8% higher. BSEB marked Wockhardt Pharma 8.5% up after the earnings. Suzlon Energy, you have CCL Products also 9.5% higher. This is also post earnings that we are seeing on this one. RR Kabel, Zodiac Energy, Rallis India is also up and about. Reliance Power is almost ending with 11% gains. Asian Granito, Moschip Technologies, Lumax Auto, Lipsa Gems, those are the stocks that are clearly buzzing in the broadest index. That's the Nifty 500 index at this point in time. What's on the lower end? Kiri Industries 11.5% lower. Welspun Living post earnings about 10% of a cut. TCPL Packaging is down. Chennai Petro is down in trade. You have Vishnu Prakash Pugalia, that's down. India Cements is down. IFCI is down. Chambal Fertilizers, that's also down. Indocount Industries about 6% lower in trade. So that's how the lower action is panning out. 95 points of a cut on the Nifty today. First day of the FNO series, starting on the back foot, 24,738. Let's see how the series really goes on. Of course, this also has the kind of weakness or choppiness that we've seen is because of the global cues that have been weak. Overnight, the US markets, Asian markets starting on the back foot in the morning trade as well. And of course, the tariff confusion that continues to reel under pressure. The markets are awaiting. At 4 p.m., we will get the India GDP figures that will help us understand whether the markets can actually cheer another quarter of substantial improvement, or is there going to be a question mark on that front? So stay tuned with us on Business Today Television at 4 p.m. and beyond that, we will be covering the GDP data for you exclusively with top economists joining in on the platform. Don't miss that.
Pakistan has been on the FATF grey list for 4 years between 2018 and 2022. It was in 2022 that it was taken off this grey list after it had promised to adhere